Today I want to talk about one of the best types of loans out there known as a FHA loan, which is really a great tool for first-time home buyers or people with bad credit or people that can't even come up with a down payment or at least a reasonable sized down payment for the first home. In fact, it's one of the most common types of loan that a first-time home buyer uses, especially because some people can put down as little as 3.5% as their down payment towards their home, and sometimes you can qualify with a very low credit score, in the 600 range and sometimes even the low 500 range. The FHA loan program really benefits people that are recent college graduates or people that are fairly young in their 20s and really eager to get a home, or even in some cases people that may have faced bankruptcy or had their house foreclosed on. So this is a really great program because it allows people that may not have had the time to build up that savings to be able to put 20% down on a home like what is typical for a conventional loan. So you may be wondering, is an FHA loan easy to get or qualify for? And I'll talk about the specific requirements in a second, but in general I kind of say yes and no. Yes, meaning that it is easy in the sense that it's more lenient as far as your credit score and not necessarily having that down payment, whereas a conventional loan is more restrictive in that sense. In fact, that's pretty much what the FHA loan program is especially designed for. An FHA loan is issued by an approved lender, and instead of the lender taking all the risk, the federal administration, or pretty much the government, takes on that risk. So now banks don't necessarily have to worry as much as far as people who would typically be high risk people that didn't necessarily have a high credit score or don't put down the typical down payment as far as like 20% or something like that. So now they're more willing to loan out to those people that are typically high risk people. You can kind of think about it in terms as far as loaning out money to a friend, $100, and you're a little bit worried that they're not necessarily going to pay it back, but their parent steps in and says, you know what, if my daughter or son doesn't necessarily pay that $100 back, I'll step in and pay that $100. So in this scenario, the parent would be the government, the Federal Housing Administration. So that's kind of a way for banks to be more willing to loan out to certain people. Now, as far as the not so easy part, as far as getting an FHA loan, it's going to require a lot of documentation. So you really want to make sure that you have your proof of income for the past 2 years as far as W-2s or tax forms. And you're going to want to make sure you also have easy access to bank statements. And if you have any kind of large lump sums of money that kind of got, deposited into your bank account, that you have a way to basically explain that. So if, you had a parent that gave you a generous gift of $20,000, you want to make sure that you have that prepared because that may be a question that's going to get asked once you're actually through the application process. But what I would at least say here is that you're pretty much going to have a lot of paperwork no matter which type of loan you go with. So there are some cons as far as an FHA loan that I'll touch on in a second, but I at least wanted to establish as far as the process of getting approved, it's not necessarily any more or less difficult than, a typical conventional loan. Now I'm going to actually just talk about as far as the specific requirements to get approved for an FHA loan. And this is going to be specific to 2020. And, throughout time it does change, but most of the times these changes are pretty minor, going from like 3.5% to 4% or something. I don't expect any major big changes. And if that does happen, I'll make a future video explaining those changes. Now, there are some limits as far as how much you can get approved for an FHA loan, as far as you can't necessarily get approved for $2 million if you're trying to buy a house, and I'll throw up those limits on the screen right now. But what I would say here is that I wouldn't necessarily worry too much because for a first-time home buyer, you really shouldn't be pushing those bounds as far as that upper limit. Perhaps if you live in a high cost living area, maybe that might be a problem, but at least you can at least be aware of it. And like I said, this may change over the course of a couple of years, but for the most part, I expect this to basically keep up with inflation. Now, the next requirement as far as an FHA loan is that you're going to have to put down at least 3.5% on a home. So for example, on a $200,000 home, that's only $7,000, which is pretty significant as far as not necessarily having to put 20% down, because on a $200,000 home, 20% is $40,000. So you're saving $13,000 or not necessarily having to come up with that amount. Sure, you're going to be paying interest, but I'm just saying for people that can't necessarily come up with that down payment, this is why it's a really good program. Now, in some situations, you may have to put 10% down depending on your credit score, which I'll talk about towards the end of this video. But basically, you would still expect only to put 10% down, which once again, on a $200,000 home, that's only $20,000, which is a lot more attainable for a lot of people versus having to put down $40,000. You're basically splitting that cost in half. So, just keep that in mind that just because you have a low credit score, it's not necessarily going to disqualify you altogether. Now, the next major requirement is the debt to income ratio, and you have to have it less than 43%. So if you're saving around 50% of your income, then you're going to be in pretty good shape. So, or to put it another way, if you're getting paid $1,000 per month and you're spending more than, $430 or more just strictly on debt payments, student loans or credit cards or things like that, then that's going to be a bit of a problem. So you're going to want to work to get that amount down. There's also something known as a 12-month rule, which basically is something you want to follow to really make sure that you get approved for an FHA loan, which basically just means means for the past 12 months, regardless of your credit score, regardless if you've had late payments 3-5 years ago, that at least for the last 12 months, you want to make sure you have on-time payments for your credit cards, your auto loan, or even your rent payments. You want to make sure that you're hitting that on time. The other two really minor requirements is that you can only have one FHA loan at a time. So if you have an FHA loan right now and you're trying to buy a new house using an FHA loan, then you're going to have to either, refinance your current home, or you're going to have to sell your home before you actually purchase the next home. So you're going to have, there might be a little bit of a timing issue there, but you can't necessarily have 3 or 5 different FHA loans. And the second requirement that shouldn't be too difficult, especially for first-time home buyers, is that you're actually going to have to occupy the home. You can't necessarily use an FHA loan strictly as an investment property or anything like that. Now, as far as the actual credit score you're going to need, a lot of people are in luck for this, that may have made past mistakes. You can actually get approved for an FHA loan having a credit score as low as 600. You can actually get a little bit lower than that. I've never actually seen that, but supposedly you can get it as low as 580 points. But if you have a credit score of 600 or above, then you're in great shape and you're most likely going to get approved, and you will qualify to only put down that 3.5%. And even if you do have a credit score in the low 500s and, but below 600, you still can get approved for certain FHA loans, but you're going to have to put down 10% or more as far as the actual down payment on the home. And I actually did a whole entire video as far as getting approved for a home if you do have bad credit, because there's a lot of people out there that may have made mistakes in their past, but now they have high income or have a lot of savings, but they still have that bad credit that they're suffering from. There's plenty of other programs like USDA loans that allow people. So I'll link that video down below if you're interested in that at all. Now, the other thing worth mentioning here is that if you have, a credit score of 610 versus a credit score of, let's say, 690 or even 720, and you're going for an FHA loan, it's not really going to matter so much, versus a conventional loan, or if you think about a credit card, the better credit score you have, typically the better rate you get. But with an FHA loan, you don't necessarily have to worry about that. So that's something to consider as well, because you may have a low credit score as far as like 610, but yet you're waiting to go, get your first home because you're hoping to build up your credit score. But if you're going to end up applying anyways before you qualify for a conventional loan, then you might as well just apply now if you're in that right position to buy a home. Now, there are certainly drawbacks to the FHA loan program, and most people would generally get a conventional loan if they could qualify for that, and that's kind of more favorable. But at least what I would say here is I want people to be aware of the drawbacks of an FHA loan, but at the same time, don't be so concerned. I'll speak more to that in a second, but I just want people to realize that there are drawbacks, but it's not necessarily the end all be all as far as buying a home. Now, the main drawback as far as an FHA loan is this basically special mortgage insurance that you have to pay. If you think about a conventional loan and you're buying a house in a traditional sense, if you had a $200,000 home and you didn't necessarily put 20% down, but it was still a conventional loan, you would typically have to pay something known as mortgage insurance. And so on a $200,000 home, that would be like $125 to maybe even $200 per month that you're paying. And so that eventually goes away once you have enough equity in the house. So on a $200,000 home, once I get that paid down to $160,000, there's, a little bit of wiggle room in that I could talk about in a separate video if people are curious. But bottom line is that once you get to $160,000 and you have 20% equity in that home, now you can remove that mortgage insurance. And so now you're saving that $125 to $200 per month. But on a FHA loan, you have a different type of mortgage insurance. And it basically has two different parts. One kind of works in a traditional sense that you're paying basically $125 or so, approximately on a $200,000 home. You're paying that every single month. But whereas a conventional loan, you could get that removed, on an FHA loan, you won't get that removed for the life of the loan. Now, there are ways to do that I'll talk about in a second, but I want to talk about the second part as far as this mortgage insurance, which basically gets, a lump sum payment that happens at the beginning of the loan, but it basically gets rolled into the loan. So on a $200,000 home, you basically find that you're going to have a 2% fee basically tacked onto this loan. So basically you're getting a $202,000 loan on a $200,000 home because of this, special mortgage insurance. Now, to go back to what I was kind of saying about how you can get this mortgage insurance removed and why in general I'm not necessarily overly concerned about people getting an FHA loan, and that the drawbacks shouldn't necessarily make people freak out, which is that basically two main points. One being that most people end up moving out of their home. The home that you're probably going to buy as a first-time home buyer is not not necessarily going to be the home that you stay in forever, especially because most people end up going to a new home within like 7 to 10 years, I think is about the average lifespan of people living in a home. So if that's the case, then you're not necessarily going to be paying that mortgage insurance for 30 years. You're not going to, it's nothing really to worry about, because you're going to end up being in a better financial position 10 years down the road and buying a new house, perhaps even qualifying for a conventional loan. The other reason I wouldn't necessarily worry too much is because there's always the option to refinance the loan. So if my financial position ends up improving dramatically in the next 3 to 5 years, I could refinance the loan, or in particular, like a lot of people are doing right now, you know, they're taking advantage of a lower interest rate right now. So if they had a FHA loan, let's say, you know, 5 years ago when the interest rate was a little bit higher, now they can take advantage of that lower interest rate. But on top of that, now they're moving from an FHA loan to conventional loan. So it's kind of a plus situation. So that's definitely an option as well. What I would say here is, especially right now, you know, don't necessarily count on interest rates going any lower. So typically, if you're going to refinance, you know, 3 to 5 years from now, I probably expect the interest rate to be a little bit higher, but you can basically calculate and figure out for yourself whether or not removing that mortgage insurance is going to be more beneficial than that higher interest rate. Now, as a few departing thoughts as far as ending this FHA loan video, I would at least say that go out there and research more and more. You know, go talk to a loan officer, or go talk to a realtor, ask them their thoughts on an FHA loan. And on top of that, you know, talk to people that may have bought a home using an FHA loan. You know, there's probably plenty of people that you know of that bought a home, and you'd be surprised how many people actually use this FHA loan program at least one point in their life. You know, perhaps you have parents that bought a home. There's a good chance that they use this when they bought their first home. So definitely just getting more information will make you feel more comfortable about this program altogether. Now, last point I would make is to make sure you're just enjoying the experience altogether, especially if you're a first-time home buyer and using this FHA loan program, because you only have that first-time home buying experience once in your life. So make sure to enjoy it. It's a thrilling experience, and you're one step closer to building more wealth. You know, buying a home is a great way to build wealth. So be excited, and, you know, make sure that you find that it's an actual rewarding experience altogether. If you want to hear my thoughts as far as, you know, tips and tricks as far as the first-time home buying experience, I'll link that video down below. And if you want to hear my experience as far as my process and my own experience as far as buying my first home, especially at a young age, I'll link that video down below as well. And if you want more advice as far as buying a home, make sure to hit that subscribe button. And if you like personal finance, business, or economics, or anything related to that, you're going to want to make sure to hit that subscribe button to stay tuned for more.